Hello guys, welcome to another market review. We're going to kick off by looking at Dixie. It's not a chart that I spend a lot of time checking. I do it from time to time just to get some context on high time frames. And what I've drawn here is a 2022 range of the dollar. And we had this massive leg where the Fed started cutting rates, and we saw Euro go below parity. We saw the GBP crashing and the pension funds collapsing. But right now, price has come very, very close into the bottom of that range. And we're looking at a weekly time frame chart. And this box here was the accumulation before the whole leg took place. And if we look at what price has done over the last months since June, it's tapped 2 times into that box and closed above it. You can see it made a lower low on September. We had FOMC on this date, and the reaction was pretty bullish if you're trying to catch a bottom on the dollar. We also have a weekly RSI divergence, and I don't think that's something to be taken lightly. We also have this sort of trend line. You can also draw it as a channel, maybe something like this, okay? And it seems to be working out pretty well. So, and also when you look at this pattern itself, it looks like a double bottom. And given the whole context of where it happened, how it happened, and what the RSI is showing, I think this low on the dollar should hold for quite a while. So what that means is that I am bullish dollar on the medium term. A lot of things can happen on the short term next week, but this thing here will shape how we look at Euro, GBP, and AUD for the next week. So let's move on to the Euro. Okay, let's move on to the daily chart. Okay, beautiful. So the Euro, it spent most of its time in this range. I call this the summer range, August range, however you want to call it. And price spent the whole summer there. It broke out, retested the 50% of that range, and just moved higher. This was when we had the FOMC meeting, which was the low, this low we saw on dollar, I think. Yeah, the dates match. So what price did after that is very important, because once it broke above the range, it closed below, retested the 50% and gave a bounce, and it then got below again. And price found acceptance inside the range, so it was very reasonable to think that price needed to go to the lower bound of the range since that happened. Okay, and this is something I want to draw a little bit of theory on. So every single time you have a range and price breaks the range and starts going up, this range is a magnet for price. And you can expect two things when price comes lower into the range. Once it's close, you can expect, if you are bullish, you want to see price gently tap or gently trade inside and quickly close above it and resume its move up. Okay, and I have a beautiful example for that on Euro New Zealand. Like this, you have your range, and price expands higher, slowly drifts lower, and as I told you, the range is a magnet for price, and you have this gentle tap into the upper bound of the range, and there she goes. You know, little to no time spent inside the range. It doesn't even tap into the 50%, and there she goes. And I'm gonna show you a very different example. Euro AUD. You have your range. Price breaks out, trades higher, and once it comes into the top of the range, it gives you a bounce as expected, but then it closed below it and even traded the lower bound of the range. Then it got sort of trapped inside. Needless to say, next thing that happened is this leg lower. This is why I say that you can expect either two things when price comes back into the range that led to a breakout. You want to see little to no time spent there and a bounce. If it closes below and starts trading inside the range again, the most proper assumption would be to assume that price is going to trade lower and break the lower bound of the range. So when we look at Euro USD, we've already seen that happen, and this breakout was not as massive, so it's not as clean, but I think the same logic still applies very well to this chart. Now, we've sort of deviated the lower bound of the range here, and we've reclaimed it, and we traded the upper bound of the range, and now you're sitting at the lower bound again. As I said, there's good reasons to be bullish dollar on the medium term, but because price is sitting at the lower bound of the range, you don't want to be short in here. Okay, and next week we have FOMC on Wednesday and the equivalent to the euro on Thursday. So also, when we look at what price did last week, the euro, this was a weekly open. We basically sold off for the first part of the week, and then we bottomed and we started making higher highs. So here was a shift in structure, and we've been respecting that shift. Okay, so what I'm expecting for next week on euro is to rally on the first part of the week and do some sort of spike, just like it did on FOMC, on the last FOMC event, just like this one, and then start the correction lower and probably a proper breakdown from this range into this area here. This is my main area of interest to build longs on Euro USD from a swing perspective. So let's go into the H1. Bear in mind that we still have an open gap at this area. This is the gray box, which lines up with the October monthly open. So that is a magnet for price. We didn't get quite, we quite didn't get to fill that gap here. We came very, very close to closing it. So because last week, when you compare what Euro did with what GBP did, GBP just sold off and made new lows on Friday. We'll cover it now, but Euro held better. We still have that gap to fill, and we have volatility. And I see a lot of people saying, I think Euro is going to go lower, I think Euro is going to go higher. But I've not seen yet someone call for lower to higher and then lower. And that is my main thesis. Okay, I think because we sort of shifted the structure on the Thursday, I think it was on Wednesday last week. We are now bullish, and I'm expecting a low to be made either on Monday or Tuesday. I don't know if below these lows here, or maybe it doesn't need to be that deep. I'm essentially waiting for a new weekly open, and price to make a low like this, and if I see a sweep of these lows close above, then I will be entering a long position, expecting a move up. And if it just very shallow pullback and reclaim the weekly open, then I will be getting long as well. Okay, now I don't know where the euro is gonna top exactly, okay, but I do expect this sort of trendline channel that I've drawn to be acting as resistance, but this will be something to observe during the next week. Okay, it will give us it will show us if it is relevant or not, but this is the main scenario I'm working. Okay, the monthly open should be resistance, because honestly the whole month on the euro has been bearish. This is the monthly open, and all we've done is expand to the downside, and here we didn't quite retest that monthly open and fill the gap. So I'm imagining this scenario and something like this on Tuesday, then boom, this, so fill the gap, retest the monthly open, and then boom, close below. And the moment we get a rejection from the monthly open and the gap is filled, I mean, above here would be our invalidation, and I'd be shorting, and I would not expect this zone here to hold. I would anticipate a much larger rotation lower, and I just think that a move to the upside like this one would catch many people offside. Just like it did around here. Okay, so that's my main scenario. I'm really how do you say that? Yeah, I'm really eager to see how it plays out, because it would be very weird if the monthly candle changed direction on the last days of the month, because remember that we will have in 2 weeks a new monthly open. So next week is the last week for October, and you don't normally see price change the direction of the candle on the last days. Okay, it is very weird, and if it did, then the whole bearish idea would be invalidated, and on November open we would be looking for an expansion higher. But yeah, I think a rotation lower would hurt many people, especially after taking this high, retesting the monthly open and filling the gap. This is my dream scenario, and I don't think anybody's ready for that. So let's move on to GBP. Okay. With this one, I'm not as sure about the same way I'm with Euro. I think it still needs to go lower, but it's been printing this downward trend line channel, however you want to call it, and this shouldn't last forever. Okay, this would be very very weird thing to see. So at some point, I think next week we're gonna see this, and then who knows? Okay, then probably goes lower. This is my main idea, just like I saw on Euro, and I said that I'm bullish the dollar, but I just don't. These structures, whenever I see them, I just, you know, something is in the back of my head saying it shouldn't be respecting that trend line much longer. Okay, so reclaim of this level here, which was obtained from this swing low, would be a very good trigger. However, on Friday we saw a fake out of the same logic that I've used. So this is why I don't want a long GBP, especially because it made new lows on Friday on bad US CPI data. It was softer than expected and it made new lows. So we retraced the whole good news for the GBP and Euro, and the Euro did not. Okay, Euro made higher highs and higher lows. So abstain yourself from longing GBP next week would be my advice. And there's also an observation that I've developed on GBP, which is, you look at this low here, okay? Very significant since it led to this move up, okay? Next time the price traded that low was pretty clean, okay? Pretty clean reaction. Next time it did that, it came into that level. It was very choppy, and I think probably a lot of people um, got fucked at these lows, honestly, expecting a textbook reaction like this one, but instead it just price just chopped people up and down until it traded higher. The thing with these levels, which are so clean and they sort of stand out to most participants, is that the way I view them is they are a magnet, and a lot of people will say this is support of, or if it was around these highs, it would be resistance. The way I view it is like, what if instead of saying this is support or resistance, you say, hey, that is a magnet for price, and I don't care what price does once it gets there, but price probably wants to get there. So why don't I trade to flow with price into that area? And that's the same idea why I've been bearish biased on GBP since I spotted these lows. Okay, because you can bet your house that a lot of people are seeing this and saying, well, if price comes down here, probably wicks this, closes above, boom, go long. Okay, you can make money trading the longs from here. I don't say it's a buy trade, but what if instead of saying that logic, what you do is say, well, price is going there because a lot of people want to buy here. Whether they make money or not, it's not none of my concern, but price is definitely going to come here because the market has interest in this area. And it can do this, it can do this, I don't care. So I think GBP goes lower. It really lines up well with the dollar analysis and the euro analysis, and it's shaping up very nicely. Let's see how it all plays out. So yeah, I want to move on very quickly with gold. I don't have much to say other than it's been very, very, very extended. I think it was on track to its best performance since 1979. It had risen. I think, yeah, I think it rose like 79% this year, or 70, around that. And there was a lot of euphoria. You would see queues of people waiting to buy gold around this area here. So if gold has been so strong and now it starts to sell off, it might also be a signal that the dollar wants to gain some ground back. So the way I'm looking at gold is, I think it makes sense to be bearish for the next week, at least neutral, okay, until this level here, is reclaimed, okay. Probably, gun to my head, I think next week probably just rallies off the weekly open and rejects from here, but I think that this area is the last line of the sun for the bears, and this is a very good opportunity to look for shorts because this area was pivotal. Okay, you can see it's a very clear SR line, and if price traded above here and held, you don't want to be shorting that. But I'm not trading gold at the moment. It's been quite a while since I last traded it, and my analysis is focused on the currencies. Let's give this some time. I think long term it should keep going higher, and I see a lot of people calling for gold to retest this level here. It's quite far, honestly, and it doesn't make any sense to be calling for these targets, especially when the macro landscape has not changed. They are going to cut rates, and there's no fiscal discipline. We are probably going to see Japanization, however you want to say it, of the economy, where they have to run negative real rates. So inflation is higher than the real rates, and that is bullish gold. So yeah, You know, I don't think that a pullback here changes the way that these central banks all around the world are behaving. They're still going to keep buying gold, and yeah, yeah. So that's why I remain bullish long term on gold. Now let's move on to AUD USD because it's in a very interesting spot right now. I just want to look at it from the daily and see where price has been last week. It went nowhere. It's trapped inside this range and it is very, very clean. Okay. You have this trend line which I use. This is magic for some people. For me, it's not. And price bounced from there and it formed a range after selling off from this swing high. Now, when you look at the daily, it is very, very telling. You've had this week and this week here formed. And that to me, and closing inside the range, that is very, very bullish for me, the way I see it. You haven't had a huge week to the upside and closed inside the range. Okay, you've had the opposite. So the way I see it, price is just accumulating before moving higher. And this again lines up well with the expected behavior on the euro for the next week. Why? Because I said the euro probably moves higher on the first half of the week and probably sells off later. Okay, and remember, euro can go down and AUD can go higher. You know, normally they move together, but its currency, you know, moves independently. So I'm open to a few scenarios here. Okay, it could make another flash lower and close inside on a daily, while it compresses like this triangle-like structure. Okay, until you know it makes higher highs and higher lows, and you know all you see is compression and compression, and boom, there she goes. I don't think this is going to happen, but you know I'm open to it. The other scenario, I think it's going to make a low here, probably it's going to break out, and you want to be a buyer of the retest of the range, or you know any pullback it gives once it breaks out. And I really think it will, because AUD tends to give pullbacks. It does move a lot on a daily, but on a weekly or a monthly, it doesn't move as much because it chops a lot. So it gives pullbacks. It rarely trends a lot. Okay. So I'm just waiting, okay, to see strength in this market, and you know once it breaks out significantly above these highs and gives any pullback, go long. Okay. And the target, I think it makes sense to target the monthly open and see price defend it. I'm not as interested in shorting AUD as I am in shorting the euro. However, I still think that the monthly open should hold, but you know if I have to go short, I'd much rather short the euro or GBP. Okay, but I still think that this structure is really, really important and really, really bullish. And the moment you see a daily close above this range, that will be my trigger to know, okay, the market has shown its hand, it's clearly bullish, and then you go into the lower time frames and you get an entry. And the line in the sand, once it breaks out, okay, once you get a daily close above this high here of the range, you don't want to see price trade into the lower bound of the range. So let's see. So let's say, you know, it closes around here. Okay. It closes around here. And the next day you get a pullback, sort of buy it. This is a wide stop, okay? But I think it's very fine because you can also be flexible, and this would be your technical stop loss, but you can have, sorry, this would be your practical stop loss, but you can have a logical or technical one, okay? Um, you don't see you don't also want to see price. Like this is the extreme scenario, extreme pullback scenario, okay? But you don't want to see price. If this is really going to break out, you don't want to see price trade the lower bound or even the half bound, the half of the range, okay? You don't want to see that. So you could cut your position way earlier. You don't need to take a full loss on this. But you know, so yeah, this is pretty much what I wanted to see. Of course, it can just break down and, you know, make new lows, and my whole idea was wrong. But when you have these weeks here and prices compressing, I think it's very clear, especially because, you know, you also come from selling off this whole leg here. So that is increased odds in a bounce. That what you're seeing here is accumulation, it's not distribution. You have already sold off significantly. And now you have absorption and absorption. So it's a matter of time before a breakout happens and you can get on the move. Okay. So yeah, let's move on to Euro AUD. Okay. Yeah. So with this one, price is pretty much sitting at the half of the range. So nothing's really clear to me. I'm leaning bearish, slightly bearish on AUD, mainly because we come from taking out this high here, and the way the move that led up to that, taking that swing high, happened was very explosive. Okay, so it is very easy to target the monthly open, which, you know, have this very big bounce. So I think that Euro AUD is going to slowly drift lower and maybe bounces from the monthly open, and, you know, then I actually have no idea. Okay, but I'm short biased on Euro AUD. I think that a bounce from the new weekly open and during the next week would be a good opportunity to sell the euro against the AUD. There's also something concerning to me about this chart, is that we have a flat open on the weekly and we have not traded that. And if you don't know, flat opens, especially on higher time frames, they are a magnet for price. And we're talking about a weekly. This weekly looks like that. It doesn't have a wick. It has a flat open. So I think it's just a matter of time before, you know, I'm not ruling out something like this. In fact, this would be very good scenario, and this here is where I would look short. I don't see price going much higher than that. I think it really goes to go lower. And given how AUD is shaping against the USD, I think that AUD will outperform the euro if we're talking on the long side, and that translates to lower euro AUD. And yeah, let's see. I think I've covered. Yeah, I think I've covered pretty much what I wanted to cover. I'm just gonna go over Euro GPY really quick because we had this open, this gap, this massive gap here, and price was unable to close it. In fact, I think it trapped a lot of people who wanted to get short this last week, and price wasn't even able to trade significantly lower than the weekly open. It just traded higher. So right now I'm neutral on EURJPY. I think that this gap will be filled, but just not yet. Just not yet. I want to see a rejection from this area here, where we also had that a few weeks back, and if it doesn't sell off from here next week, and instead it just starts climbing up, you just target the next level, okay, the next extension. But yeah, I think you want to take into consideration the filling the gap idea and therefore short EURJPY. If you see price trade higher and you start closing below this level, you start seeing wicks to the upside and failure to close above significant level, and then okay, then there's a pretty good chance that we come back into this area and therefore we fill this gap. But this is a massive move. We're talking 400 pips, so we should be patient, okay? There's also a scenario that I've traded sometimes on the EURJPY, like here, okay, where you have your gap, bullish gap to the upside, and where is the weekly open? Sorry. Okay, you should do it. Okay, yeah, there you go. You have your gap, and look at the context. We are sitting at the top of a range, and we open to the upside like this. I've seen this happen multiple times where you're sitting at resistance, price gaps and opens the week north to that resistance, and the moment price gets below the weekly open, then you are fucked. Then you have your short trigger. Look at this. So we are sitting at resistance, we have a gap, and people are saying, oh yeah, it's going higher. Incredibly bullish reaction from the market. So it trades above the weekly open, and the moment it deviates, the top is in for the week. And any retest of the weekly open is resistance. Look at this. And you just feel the whole gap. And I think we had a similar occurrence here. Yeah, look at this. Gap to the upside. The moment it gets below on this candle here, the retest closes below, then you fill the gap and retrace the whole move. And there was no huge gap here to fill. So the reason why I'm saying this is because having this massive gap here unfilled, if we get that pattern that I shown you where we have a gap, boom, and the weekly open is around here, and we get below the weekly open, pretty good chance that, you know, maybe that shit starts a move lower and then you get your gap filling. But you know, this is some scenario, nothing clear for me right now, but yeah, this looks very strong, but until it doesn't, okay. But you know, the main place will be EURUSD and AUDUSD, and maybe EURAUD. But I will be observing EURJPY and probably cover it the next week. So hope you guys found this useful, and see you next week. Bye.